Hello everybody, this is Derek, and I was seeing on CNBC today that they were talking about shorting the dollar. The video link is in the more info, and they are stating that this is now mainstream. We are seeing on magazine covers that are stating the death of the dollar. And you really either got to avoid the subject, lie about the subject, or talk about or put the truth within the subject. A lot of what they have been doing was avoiding the subject, but when you are seeing gold going higher at the levels that it has been, you are seeing the dollar just stair-stepping its way down for the last 8 months. People are going to figure it out. So now we're starting to notice the mainstream is figuring out about the dollar losing its value. We're seeing the index going below 75. So that is pretty big to go that low. And they're saying this stuff now about shorting the dollar, and it makes me wonder, does this mean we're going to have a bear market rally? Nothing goes straight down, nothing goes straight up. But pretty much speaking, for the last 8 months, the dollar has went straight down. We can see that with the price of Canadian gold. Gold in the States a little over 1,100, making new all-time highs. In Canada and most likely Europe and Australia also, gold made new highs at that point, and here in our country 7% from its highs right now of around 1170, 1180-ish or so an ounce, with the 5.2% rate on the dollar. And they're saying that this is good for exports, and it is to a point, because it does mean cheaper prices. As if I were to take the price of your products back when gold was an all-time high in Canada, I would now see a substantial 20% discount on the price because of the change in the dollar. So that's going to be an advantage for it, but the problem is that it's dollars itself, and we're seeing a lot of countries just getting out of the US dollar. A couple hundred metric tons of gold was purchased by the India Reserve Bank, or their central bank. This does show signs that it's going to be happening pretty soon. And they talk a lot about the recovery, and what got us out of previous recoveries was banks' ability to sustain job growth by financing. Now we're at a point where we have what people call easy money or cheap money, because the feds are lending money at close to nothing. But as far as banks lending back the money, they're doing it a lot less, and of course the interest rates are much higher than that. And we see banks making all of these profits, and that's because they're reducing their risk, I think, too, because they're not lending out that money. That creates the problem for not having any job growth. But either way, you have to decide which variable do you want to go. Do you want to go the one we're currently at now, where we have very tight credit, and what this will result in is a bust cycle, if you will, as there's no job creations, and there's really nothing to stop the tsunami fall of the commercial real estate collapse, and many companies at the point, because of their cost-cutting measures, having to just shut down business. Now the other alternative is to lend out money, and what that would be doing is the same thing we've been doing the whole time, and that is increasing the debt level and delaying what has to happen, and that is the end to the money system that we have today. So I'm going to finish it at this. Thank you for watching. Take care. Peace out. Bye-bye.